Hey guys, welcome back. I hope you had a really great day trading today. I definitely had a much better day than I did yesterday, and today was Thursday, July 11th, and we did have CPI in pre-market, and the markets definitely had some reactions. And starting in SPY, we did see the first candle was very slightly up, and then we dropped. We got down to the 35 EMA, broke underneath it. We got into this gap from, this is Tuesday going into Wednesday of this week, and we closed that out. And then when we tried to swing back up, the 35 EMA said nope, and it pushed us back down, and we did close underneath the 35 EMA for the first time since we bounced here on the 30-minute 200 moving average, and then we got above that 35 EMA, and then we've been trading high above it since then. So today we dropped underneath that, we closed underneath the 35 EMA, so tomorrow it'll be interesting to see if that 35 EMA has made a switch and is now resistance. SPY did close down 0.86%, VIX closed up 0.55%, and then we did not close within the implied move. We actually closed just underneath it. I had the bottom of the implied move at 557, and we closed at 556.48, so just underneath it. So no thumbs up today. And switching over to QQQ, the Nasdaq definitely had a rough day today. We did see a lot of tech sell off today, and QQQ just dropped at open down to the 35 EMA. It was a similar situation here where once we bounced on that 30-minute 200 moving average and got above the 35 EMA, we have been trading high above that level until today we broke down and printed our first red candle and then dropped completely outside of the trading range down to this gap, which was from the 4th of July. So we had that half day before it, and then we gapped up to open Friday after the 4th of July. And once we filled that gap, we did see a little swing up, but it wasn't enough of a swing to get us back into the trading range. So huge down day in a lot of tech companies. We had Nvidia today down 5.5%, Google down 3%, Microsoft down 2.5%, Tesla down 8.5%, and I saw in after hours that it dropped another 1.5%. So a 10% down day for Tesla, and then Netflix down almost 4%, Apple down, Adobe down, Amazon down, Meta down 4%. So huge drops in tech today, and that was reflected in QQQ. QQQ did close down 2.19%. VXN closed up 3.7%, and we did not close within the implied move today. And switching over to SPX, we did see that same pop at open and then a drop down to the 35 EMA. We got underneath the 35 EMA right into this gap from when this is Tuesday going into Wednesday, and we did fill that gap, and we did see a bounce, and that 35 EMA popped us back down. You could see right here 35 EMA rejected us, and then twice those last two candles at the end of the day, especially that last candle of the day, we tried to get back above it and got pushed back down. So we did close out that first gap. That was not from yesterday but the day before going into yesterday, and then we had another gap from Monday going into Tuesday, and we did not drop down to that. So that is still a completely open gap. SPX did close down 0.88%, VIX closed up 0.55%, and here also we did not close within the implied move. The implied move was right here, 55.95, and we closed almost $10 lower, 55.84.55, actually a little bit over $10 down. So that was SPX, and IWM had a really fun day, a breakout for sure. We opened with a gap up completely outside of the implied move. In fact, when we dropped in that first candle, we didn't even get back into the implied move. We bounced right there, saw 3 huge candles up, and then had a little bit of sideways fun into the end of the day. Looks like a little bull flag right here. So a breakout in the Russell, a breakout in small caps, and you could see that we did have a triangle right here. We had lower highs and higher lows right here, and it was just a matter of time before we saw which direction it would break. And we did see earlier this week, we did see higher lows and support on that 30-minute 200 moving average on Monday and Tuesday, and then Tuesday, Wednesday, you have right here that support on the 35 EMA, and then today we just gapped up. So the support was definitely building and breakout today. So IWM closed up 3.59%. This is definitely interesting. The Russell Volatility Index up 10.53%. So definitely be on the lookout for some volatility. I wouldn't be surprised if we pull back to the 35 EMA and maybe even test the top of this downtrend before moving higher. And IWM did not close within the implied move. In fact, it never even entered the implied move. All right, so that was today, and tomorrow we do have PPI in pre-market, same time, 8:30 Eastern. So let's go check out tomorrow's levels. Alright guys, so tomorrow is Friday, it's the last day of the trading week, and before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and you love that I break it down every night, then please make sure to give this video a like, and also don't forget to subscribe and turn on notifications so you don't miss out when I do post new videos. Alright, so starting in SPY, tomorrow's implied move is between 553 and 560, and that is from options. The 30-day average volatility is a little bit wider, 550 to 563. In the past 2 days, we have seen those outer edges, so that is important. And the implied move on Monday's contract is between 552 and 562, and to the upside, the very first level to look for is going to be that 35 EMA. This is the first day since the beginning of the month that we did see a red candle, meaning we're trading underneath the 35 EMA, and today, once we got underneath it, it did act as a resistance. So that is absolutely the first level to look for. If we do get above it, then we do have the top of the implied move at 560, and on a Monday's contract, 562. And then to the downside, the bottom of the implied move is 553, and then on Monday's contract, 552, and then we have the 30-minute 200 moving average just underneath our trading range, and the last time we saw that level, we did bounce twice, and then we took off. That's not what has to happen if we get down to that level, but I would expect at least a technical bounce if we did see that level. And then from there, reevaluate the strength of SPY. And then switching over to QQQ, we do have an implied move over here, and it is between 487 and 497. So implied move is back under 500. And then the 30-day average volatility, 483 to 500, 501. And then the implied move on Monday's contract, 485 to 499. And to the upside, the first level to look for is going to be that 35 EMA. It is actually cutting through the top of the implied move from corner to corner. And currently it is around, let's see where we have it, 496. And then the top of the implied move is at 497. Top of the implied move on Monday's contract is 499. And then to the downside, we did see a little bounce right here. I wouldn't call this a very strong support, but when we did fill that 4th of July gap right here, we did see a little bounce, and that is at 491. Underneath that, we do have the bottom of the implied move at 487, which also the 30-minute 200 moving average is right there. And then the bottom of Monday's implied move is 485. And also that 30-minute 200 moving average, the last time we were at that level, we saw a pretty clean bounce, and we got right back above that 35 EMA. All right, and then SPX, implied move over here is between 55.55 and 56.15, and that is from options. The 30-day average, 52.20 to 56.50, and then the implied move on Monday's contract, 55.40 to 56.30, and to the upside, that 35 EMA definitely needs to be on your chart. If we get above that, then we have the top of the implied move for tomorrow, 56.15, and then on Monday's contract, 56.30. And at the very top of the trading range, at the top of the 30-day average volatility, we actually have new all-time highs. We did make those new all-time highs today before we dropped. So all-time highs definitely in range. Don't know how likely that is, but they are there. And then to the downside, we do have this gap from Monday going into Tuesday. So this was the gap before the first Chair Powell testimony right here. So that was the first one. The second one we just filled today, so that is closed. And then that is at 55.70, let's call it. And then underneath that, the bottom of the implied move, 55.55. And the bottom of the implied move on Monday, 55.40. And then that 30-minute 200 moving average is just underneath our trading range. So if we do drop hard, I would think that that would catch us for max pain, at least for tomorrow. And last time we saw that 30-minute 200 moving average, we did a double bounce and we took off. And that is SPX. This looks like a really fun trading range. It's between the 30-minute 200 moving average, 35 EMA, and all-time highs, so lots of fun here. And then IWM, we have an implied move between 207 and 214, and that is from options. And the 30-day average volatility, I do have it in here. Actually, that's the implied move, so it's wider than the 30-day average, which is right here and right here, and that is between 208 and 213. So it's about $1 less wide in each direction. I don't even know why I have it in there. It doesn't matter since options are wider. And then the implied move on Monday's contract is between 206 and 215. And to the upside, we do have, I'm going to switch this over to the daily time frame, and to the upside, and pretty much where we closed is where we saw highs back in April. So we are at a previous resistance level. Let me just switch that to a solid line. So that is right under 211. So right where we closed, we are at a known resistance level. So that could cause a little chaos if IWM tries to move higher. You could see that with that line exactly where it is. The wicks are the only things above that. All the bodies of the candles are underneath that. So that just shows that there's a little bit of selling pressure. Maybe not enough to tell yet, but it looks like once we got to that level, we got pushed down and then came up, pushed down, and then tried in that last candle, pushed down. And that's why, and that's because we are at a known resistance level. So that is April highs. So if we do push past that, and get above that level, the top of the implied move is 214. I didn't look back further. I don't know if we have anything else. Let me look on the 5-year. So yeah, that 211 level right here, you could see we saw resistance again right here. And before that, it was a support. So 211 looks like a pretty critical level. Definitely can see that a little bit more clearly zooming out. And above that, I don't see much until we get a little bit higher. So 211 is the level to break to move higher. If we get above that, if that turns into support again, 214 and 215 for Monday. To the downside, 35 EMA is underneath the trading range, and if the 35 EMA is underneath the trading range, underneath the implied move, then more often than not, you can expect a flat day or a down day. That 35 EMA is a magnet, so it does tend to pull price in, and you could see previously we just danced around the 35 EMA. We don't stay away from it for too long, so knowing where it is can help gauge direction. Even if we do move higher from there, it's likely that we test that 35 EMA and maybe see a down day before pushing higher. Underneath that, 207, bottom of the implied move, and 206 is the bottom of implied move for Monday. Underneath all of that, we have this 30-minute 200 moving average, which for the first time since, let me zoom out here. So since, I'd say right here, so about first week of June, it's had a negative momentum. That 30-minute 200 moving average is curling up. It is pretty far away, but it is still, the momentum is positive. So if we do pull back, I would look for maybe a fight to get it back to up. So there you have it, guys. Let's have a fun Friday. Have an awesome weekend. Have fun, trade safe. Make sure you take profits when you're up, and I'll see you guys